Two Luxembourg-registered subsidiaries of Petronas have reportedly been seized by heirs of the late Sultan of Sulu. The Financial Times or FT reported today that the move was linked to a $15 billion or 66.55 billion ringgit legal dispute with Malaysia, arising from an agreement signed 144 years ago. According to the report, bailiffs in Luxembourg had seized on behalf of their clients Petronas Azerbaijan Shah Deniz and Petronas South Caucasus, which manage gas interests in Azerbaijan and could be worth more than $2 billion. Petronas has not responded to a request for comment at press time. FT said the move is part of legal efforts by the Sulu heirs to win compensation over land in Sabah that they said their ancestors leased to a British trading company in 1878 before the discovery of vast natural resources in the area. Under the agreement, the Sultan of Sulu granted and ceded in perpetuity the sovereign rights over certain territories located in North Borneo, now forming part of Sabah. As a token, 5,300 ringgit per annum was to be paid to the then Sultan of Sulu, his heirs or successors, but payment was ceased in 2013 following the Lahad Datu armed invasion. In March, an arbitrator in France ruled that Malaysia must pay the descendants $14.9 billion. The state-owned energy company was dragged into this dispute as Malaysia does not recognise the decision. The FT also reported that if Malaysia continues to ignore the ruling, the money owed to the heirs is set to increase, and the claimants' lawyers indicated that they would pursue more state assets if a resolution was not reached. It noted that the arbitrator in France previously highlighted for every year the Sulu heirs are getting unpaid, Malaysia's outstanding liability to them will rise by 10%. The Employees Provident Fund or EPF is expecting 300,000 contributors to utilise the i-Lindung platform launched today within the first year of its introduction. Via the platform, EPF members are able to buy insurance and takaful products consisting of life and critical illness protection at an affordable premium with funds from account 2. The minimum premium is 30 ringgit per year with protection of 10,000 ringgit, and the offerings are available with immediate effect. The participating protection providers are FWD Takaful, Prudential Assurance Malaysia, Prudential BSN Takaful, Etika Life Insurance and Etika Family Takaful. EPF Chairman Tan Sri Ahmad Badri Muhammad Zahir said, aside from aiding its members, i-Lindung is also aimed at helping realise the country's aspiration towards achieving an insurance penetration rate of 70%. Citing a 2020 study by the Life Insurance Association of Malaysia, Ahmad Badri said the rate stood at just 56.1% for insurance and takaful, and after deducting the number of policy holders with more than 2 policies, it is further reduced to 41%. Of the total percentage, he said over 90% did not have enough coverage for themselves and their families, and only 4% of households from the low-income group have takaful coverage or life insurance. Putrajaya expects revenue from the one-off windfall tax or prosperity tax to help a little bit towards replenishing the country's coffers as it continues to provide subsidies amid a challenging economic environment. Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz said he doesn't have the exact figure, but the collection from the tax should match what was previously expected. He also pointed out that his ministry had not factored the prosperity tax into the government's revenue when Budget 2022 was drafted last year. Last November, Deputy Finance Minister Tu Yamani Hafiz Musa said the prosperity tax should raise at least 3 billion ringgit. On the country's overall outlook, Zafrul said Malaysia is ready for any eventualities, including a global recession. He said that based on preliminary economic data, the government is confident that the country will still be able to record positive growth this year, even if the world's growth engines sputter. Malaysia booked strong economic growth in the second quarter of this year, and the minister believes the momentum will continue into the third quarter, saying that the latest statistics show Malaysia remains on track to achieve its revised targeted growth of 5.3% to 6.3% this year. Shares in glove makers rose today on the back of reports of multiple Chinese cities adopting fresh COVID-19 curbs to rein in new infections, with the commercial hub of Shanghai bracing for another mass testing effort after the discovery of a highly transmissible Omicron subvariant. Top Glove Corp rose to an intraday high of RM1.08 before paring some gains to close still 2.02% higher at RM1.01. Supermax Corp jumped to 87.5 cent before ending the day up 1.21% at 83.5 cent, while CarePlus Group, which hit a high of 47 cent, ended trading up 4.71% at 44.5 cent. Harta Lega Holdings closed 4.2% higher at RM2.73 after hitting RM2.77 earlier today, and Kosan Rubber Industries jumped to RM1.35 before closing up 1.56% at RM1.30. Other glove makers like Rubberex Corp Malaysia climbed to 54 cent before finishing the day at 52 cent, still up 1.96%, while Comfort Gloves closed unchanged at 57 cent after peaking at 59.5 cent in early trade. CHINHIN Group Property has bagged a RM330 million contract to undertake substructure and superstructure works for Intel's new packaging facility in Penang, dubbed the PELICAN project. In a Bursa Malaysia filing, the group said its subsidiary Kayangan Kemas was awarded the job by Excite Malaysia. The 15-month contract is targeted for completion by the second quarter of 2023. It is expected to contribute positively to the group's earnings and net assets for the financial year ending December 31st, 2022 and onwards during the duration of the contract. CHINHIN Group Properties shares closed unchanged at 82 cent, giving the group a market capitalisation of RM363.57 million.